Are sellers in trouble? Well, let's take a look. Late rent payments climb as renters struggle to keep up. And we've taken a look at this at the previous video. Mortgage delinquencies are exploding. I mean, that's not good news. And over here, if we actually go back to the late rent payments climbing as renters struggle to keep up, what actually enticed me to go research this is I know someone that manages multiple and multiple apartment complexes in the greater Salt Lake area. That's where I'm a real estate agent. And they're a regional manager. Well, they were telling me that they're having a hard time filling the vacancies, their apartment vacancies, and that they're offering incentives and that there are some tenants that have stopped paying rent. Now, that is not good news for the economy or for the housing market, because if rent is getting cheaper and cheaper, that could impact home prices, especially if the discrepancy between renting and buying with so much uncertainty is going to be much more lucrative for that potential buyer or tenant. Now, we see that those delinquencies are exploding and that we are in a credit deterioration cycle where the average American is seeing their credit score dropping. That is not good news because people need a credit score in order to buy a house and even to take out a loan. Now that's easier, but you do need a good credit score, especially for a house as there is an underwriter that is assessing your risk and you need to actually qualify to the Fannie and Freddie guidelines. So that is something, the credit deterioration cycle, that is absolutely happening because just at the beginning of the year, in the first 3 months, approximately 2 million people have had a delinquency from a student loan show up that have bought cars. So they have a car loan and 2 million people are now seeing the impacting their credit score. So that is showing you that the average consumer is under a lot of stress right now. And that is happening because the deterioration cycle for the credit has started. Now, this is also a very, very big kicker right here. The buy now, pay later tracker. This is absolutely crazy. So right here, 41% of users late in the past year, more using loans for groceries. I mean, essentially 1 in 2, 50%, half of the people with buy now, pay later have been late in the last year. And using it for groceries, this is supposed to be for a bed or for some kind of desk purchase, not for groceries. And it's extremely easy to qualify for these buy now, pay later programs. So we have to ask ourselves, if the average American didn't have access to this, where would the economy actually be right now? We are running on credit. And if we analyze this, 41% of the buy now, pay later were late this last year compared to 34% a year ago. Now that in itself is astonishing. 34% is a lot as well, just showing you that we are running on debt and borrowed time. Now, Biden was putting in regulations to regulate the buy now, pay later, kind of like a credit card. Well, Trump pulled all that back, but I mean, people are using this for everyday purchases and they don't even run your credit score in some cases to approve you. Extremely easy. And right here, if we take a look, 23% that say that they've had 3 or more active buy now, pay later loans at one time. Now, this is hidden debt. Now, if they go and buy a car or they open up a credit card, they wouldn't even see this because it's not reported on their credit score. The only time, from my understanding, is if you are delinquent, not paying it back, they send it to collections. That's when it could show up on your credit score. And right here, if we take a look, 25% of users say they've used the loan to buy groceries, up from 14% a year ago. So this right here is showing you that people are struggling more and more as the years are progressing. Now, right here in my local housing market, we're seeing that the under contract, the pending home sales continue going negative year over year. Now, this is something to pay attention to so that you can time the market, know when you have the advantage as a buyer, when there's less buyers, more sellers, less demand, more supply. That way you can negotiate yourself the best deal. And that's why it's very important to make sure you find an agent in your area that's actually going to be sharing this data with you and not just tell you it's a great time to buy whenever you want to buy and the market's just going to go up and buy now and refinance later. Well, to refinance later, you need to have equity in the home. So even if interest rates come back to 3%, but you're upside down on your mortgage, no bank is going to give you that loan because nobody wants to take an upside down mortgage and then give you and cut your rate by half. So that whole marry the house and date the rate, you could be stuck in a marriage that you don't want to be in. So right here, we're seeing that under contracts continue decreasing year over year. So again, this is my local Greater Salt Lake housing market. And if you haven't yet, smash the like button, hit the subscribe button, because nobody has your back like Dinko the Realtor. Right here, you're seeing the inventory in my Greater Salt Lake housing market is increasing year over year. And right here, we're seeing that the pending sales under contracts are trending negative here on the graph, just like this data is showing us here, this preliminary data. And if we take a look at the 30-year mortgage, well, if we take a look here, we see that it was dropping. The Fed did their rate cut, and all of a sudden it U-turned. Well, that same thing happened over here as rates were coming down. The Fed did their rate cut, and all of a sudden interest rates just started exploding back up. Now, you have to ask yourself, is that good news or bad news for sellers? Because if these interest rates come back up here to the sevens, that could just spell doomsday for the economy as a whole. Now, I want to hear from you in the comments if you think sellers are in trouble or not. If you haven't subscribed or hit the like button, do both. It'll help me grow the YouTube channel. It'll help you stay up to date. So rent payments climb as renters are struggling to keep up. And someone that I know here in the Greater Salt Lake area, that's a regional manager, is seeing this on all of their apartment complexes. They are seeing people not paying rent. They are offering incentives and still having a hard time to fill those vacancies. Now, right here, we see that mortgage delinquencies are exploding. They say that it's one of the fastest, if not the fastest, debt that is accumulating delinquencies right now. And right here, if we take a look, the credit deterioration cycle has started. And right here, as the student loans have ended, 2 million people have been impacted that have a car loan, that have a student loan now reporting a delinquency. 2 million just in the first 3 months. I mean, that is a lot of people. And the buy now, pay later, we're seeing 41% are late in this past year and up from 34% a year ago. And the people are actually using buy now, pay later to buy groceries. I mean, we are just running on debt and some more debt and on borrowed time. And right here, of course, you want to hire yourself, get in touch with a good real estate agent, see who's going to actually give you the data, understands what's going on, and seeing if your market, now certain markets like Chicago, those markets are seeing more buyers, less supply, a little bit more competition. So you want to make sure that an agent is showing you what's actually happening. They can share with you the numbers, the graphs, and that way you can make yourself a calculated decision of what you want to do when it comes to buying a home. And so right here, you're seeing inventory has exploded here this year compared to the last few years in my local housing market. It's happening nationwide as well. And right here, you're seeing that graph is showing those pending under contracts. And then right here, the 30-year mortgage is doing a U-turn. And it did that at the beginning of, or not the beginning of last year, but when the Fed did their rate cut in September of 2024, it exploded up. So all this is really doing is benefiting the banks because their borrowing cost is going down because the Fed is cutting rates, but yet they are charging mortgage rates still much higher than what the Fed rate is. So their margins, their profit margins have just increased. And right here, we're seeing that U-turn happening again. So this is something we definitely have to keep an eye out on. And I'd love to hear from you. Put down there below what your thoughts are. Are sellers in trouble based on what we're seeing here? And until next time, have a great day. Have a great night.